Friday the 5th of April, looking at the Aussie dollar versus the New Zealand dollar. Now, I thought that we'd hit some important resistance on this, as you know, and it did hold for a couple of days, but it wasn't good enough for a short, really. Yesterday, we only dipped down to 104.72, so yeah, we really only dipped 10 pips from the resistance level, and eventually we broke higher, a very clear break. Once we got up through that previous high, 104.95, the market took off. So this now looks pretty strong. I would ignore the fact that we're hitting the upper Bollinger Band. Any retracement back to 104.85, 104.75 should hold support. I would probably put a stop below 104, say 104.65. So it'd be a relatively low risk long. But I don't think we're going to get there. I think this is now a clear breakout. The next challenge for bulls is to get through 104.45. Where did we get to yesterday? 104. What was the high? 104.41. So clearly we've got to get through, call it 104.50 for the next leg higher, and there's no reason why we can't really get up to the low 106 area. There really isn't anything in the way of that. So it all looks very strong for the Aussie dollar versus the New Zealand dollar. Having said that, the Aussie dollar versus the US dollar is an absolute nightmare to trade unless you're an expert scalper and you can see what's been happening. We've been topping out at 71.30, 71.25.30 every day. We're up one day, we're down the next. This is not a kind of market that I can trade, but if you're doing well, then good luck. Even the New Zealand dollar is not doing much. It's kind of weird how the Aussie dollar is rocketing against the New Zealand dollar. But there you go. We've got support down at 67.45, 67.35 today in the New Zealand dollar versus the US dollar, and a break below there should be pretty negative. If you want to try along there's no reason why you wouldn't. We're oversold and we are range trading. I put a stop below 67.25, so that's a pretty low risk trade, about as low risk as you're going to get. 10 or 15 pip stop, and then below, on a break below 67.25, say a break below 67.20 maybe, we would look to reverse into a short position, because it looks like there is significant downside potential once that support is broken. Dollar yen was held only temporarily by the 200-day moving average and that trend line. We dipped yesterday only to 111.32, so not a huge profit potential. And now we've broken higher, we're testing this much less important trend line here, about 2-month-old trend line at 111.80. If we break above there, we're looking at, if we get through 111.89 anyway, we're looking at 112.10. We've got this high up here at 112.12, so that would be the next obvious target. And then if we close the week above there, it's much more bullish for next week. Unfortunately, there's really nothing else to comment on the other forex markets. They're just drifting before the non-farm payroll today, Friday. So gold, we had a big support level down at 12.84, 12.82, with stops below 12.80. So that works if you manage to jump into that gold long position. Yesterday we caught the low pretty much bang on, and we bounced back to 12.93. So there's roughly 10-point profit in the trade as I speak. Nice bullish candle, this one, with a long lower wick and the little blue body shooting star, I think you call that. There's no reason why we can't go higher today. A break above 12.95 would look good, take us up to 12.97, and I see a good reason why we can reach the low 1300. Certainly would be a good target today. If we get up that high, will be worth getting out of the long positions before the weekend, because you'll have almost 20 points profit on that. Whether we get there today, I don't know, but it looks like a good target. Oil, I'm a bit confused. I thought once we got through this trend line and 200-day moving average, which was around 61.60, 61.80, I thought we would then rock it. I thought that was the start of the new leg higher, and it just hasn't been. This little doji here showed uncertainty. And yesterday we dipped a little bit further, just back to 61.89. So the question is, do we hold above the 200-day moving average, which is at 61.70, 61.60? I think that's what key. We don't seem to be really respecting this trend line at the moment. We're holding below it right now, so there is a risk that we test that 200-day moving average. I would suggest that if we close the week above it, that's okay for bulls, and if we close the week below it, it's looking a bit more favorable for the bears, and maybe we'll dip as far as 60.40, 60.30. Anyway, slightly confusing picture there, because as I say, I really thought we'd see some good blue candles on the break higher, but we're not doing that. We're not significantly overbought. We've been hovering in overbought territory for a while, so I don't think I'm missing anything on the weekly chart. No. Maybe it's just one of those things that we'll trade sideways for a while before we move up. I mean, you can see that this bull trend has been littered with plenty of sideways action along the way, with a little burst up, then lots of sideways action. So this just could be some more sideways action after the latest burst higher. Really difficult markets to trade at the moment. US stock markets are hovering near their highs, as you can see. S&P just holding, that was Wednesday's high, so we're still holding Wednesday's high. No sell signal, a little bit of indecision, possibly running out of momentum, but certainly no sell signal. European markets continue to catch up with the US markets, so the DAX looking good again yesterday, struggling a little bit with that trend line. I don't think that trend line is anything major, so we could push higher against it. I certainly wouldn't be shorting this market yet. Of course, a lot depends on the non-farm payroll number today.